Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Morning. What's today? Thursday, July 7th, 2022. Futures looking up modestly last I checked. 30, 40 bips kind of thing, maybe 50 for the Nas. NASDAQ continued to lead the way here a little bit. Past week or so, wants to act a little bit better than the S&P. We did comment yesterday that a lot of the cybersecurity names didn't make those new lows in June, like the broad market as far as the S&P goes. VIX down to 27, 27 handle actually, and commodities are all lifting. Copper's up 4%, WTI up 1%, nat gas 3.5%. That's interesting. Fed minutes out yesterday. They did talk the talk in terms of taming inflation, doing what it takes to bring it down, all that stuff. Whether they actually get in all the rate hikes they are expecting to remains to be seen, in my opinion. I do think they're going to have to blink in terms of the slowing economic data and what really happens out there. There was also some mention not talked about in those minutes about mortgage bonds, and that they are obviously they're going to be they're not buying these things anymore, and they're doing the reverse. But the fact is they may be opportunistic with them. I forget the exact phrasing they use, but I think the message here is that they see kind of how wrong-sided and how quickly the mortgage market has turned, and that is a bit of a concern. You look at China, they did announce some stimulus overnight, looking 220 to 240 billion in terms of bond purchases. Sounds pretty small, but nevertheless an example that is an economy that is on the stimulative path, not on the restrictive path. K-Web is a name over here for us. One thing that was interesting last night too, Samsung came out, reported their quarter, and it came out better than feared. A lot of, I think, sort of relief around the quarter. It's a huge read-through in terms of they have their own foundry, they've got a memory chip business, obviously they got the handset business, they're in electronics, they're just a huge player across the board in tech. You're going to see Taiwan Semi up about 4% today in a read-through from Samsung's foundry business to Taiwan Semi. They are the best out there. When it comes time to getting back in semis, that is probably should be one you should think about. That's one we're going to think about, not today, but definitely on our list. But yeah, you're going to see a bounce back in semis today on that sentiment from Samsung. And I think the overall thought that maybe some areas of tech have potentially overcorrected here near term, so that's going to be a positive lift, I think, continuing for tech. And also, this is interesting. So there's been some increasing positive grumbles on financials, banks, financials, brokerages. Not so much on the lending side, more on perhaps trading, capital markets, even though capital market business is like zero right now. But the sentiment is picking up. You've got some guys out there that are more or less on the skeptical to bearish tilt of the fence. They're coming out positive. Doug Cass is one. Danny Moses is another. So for us, the three names that we are targeting would be, we do own that starter position in Goldman Sachs we bought a week ago or so. We probably will add to that near term and maybe add to it again on the report if the report is weak. So kind of buy the news, if you will. JP Morgan, obviously one of the best and brightest out there. It's not quite near that tangible book value, which I would like, unlike Goldman that is trading below 1 on the tangible book. And Bank of America, another one, just one of the best operators out there, I think. So those are the three for us. And we will probably be adding to that Goldman position potentially as early as today. But something to take note of. Check out those mentions from those guys who, again, are a notoriously pretty skeptical bunch. All right, that is it from me. Have an awesome day, and we will talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.